Okay, let's dive into this explainer. We're looking at a massive, comprehensive 2026 SWOT analysis for AMD, heading into what is arguably their most high-stakes earnings call of the cycle on May 5th. I mean, right now, the entire tech world is glued to this AI hardware battle, and AMD is sitting squarely at the center of the ring. This isn't just your standard quarterly update. This is a defining moment. It's where the overarching narratives are either going to be proven totally correct or shattered completely. So let's unpack exactly what's on the line here.
Look at that number, $700 billion. That's a 7 with 11 zeros. This staggering figure was just confirmed by the recent Magnificent 7 Q1 earnings cycle. We're talking heavy hitters like Meta, Microsoft, Amazon, and Alphabet. What you're actually looking at here is their combined 2026 hyperscaler capital expenditures. This is the massive pie that everyone in the silicon industry is literally fighting tooth and nail for right now. To put that into perspective, Amazon spent over $44 billion in Q1 alone, and Microsoft is flagging a massive $190 billion for fiscal year 2027. The sheer volume of cash being poured into data centers is just unprecedented, and honestly, it sets the stage for everything we're about to discuss.
To make sense of how AMD fits into all this massive spend, here's our roadmap. First, the May 5th showdown. Second, the bull case for AMD. Third, the bear case against them. And finally, we'll give you the exact earnings scorecard to watch for.
So part 1, the May 5th showdown, setting the stakes for Q1 2026.
You really need to think of this impending Q1 2026 earnings report as a ticking clock. It's the ultimate moment of truth that's going to either validate AMD's strategic narrative as a true AI powerhouse or basically break it under the weight of some incredibly high expectations. To grasp the pressure here, we have to look back to look forward. Back in Q4 of 2025, AMD delivered an absolute blowout, a record $10.3 billion quarter. That was up 34% year over year. During that report, CEO Lisa Su confidently framed their ad business as entering its, quote, next phase of growth. And you know, she actually used that exact same phrasing back in 2018 during their wildly successful server CPU ramp, so she knows what she's doing there. Now, this May 5th print is the very first hard data check on that promise. The company guided for a midpoint of $9.8 billion for Q1, but Wall Street's consensus has settled slightly higher at $9.85 billion. The market absolutely expects them to hit that mark.
Let's move to and see how this builds into part 2, the bull case for AMD and their second source arsenal.
Okay, so this right here is easily the single most important mathematical equation in the entire AMD bull case. Think about it. When sovereign nations like Saudi Arabia or France, or massive hyperscalers like Microsoft, sit down to build out their AI infrastructure, they explicitly do not want a single vendor monoculture. They don't want to rely on just one supplier. They desperately want a second source. So if AMD can capture just 5 to 10% of that $700 billion hyperscaler capex we talked about a minute ago, well, do the math. That translates to $35 to $70 billion in addressable spend beyond what NVIDIA absorbs. It is just a colossal opportunity simply for showing up as a highly credible alternative.
And this brilliantly illustrates exactly how they plan to be that alternative. When we pit the upcoming AMD MI400 HBM4 specs directly against NVIDIA's comparable GB200 systems, a really massive advantage emerges. The MI400 is packing 432 gigabytes of memory and 19.6 terabytes per second of bandwidth. That gives AMD a 1.6 times advantage in high bandwidth memory. Now, why does this actually matter to us? Well, because by 2027, inference workloads, meaning actually running the AI models instead of just training them, are projected to take up 60 to 70% of all AI chip demand, and inference places a huge premium on memory capacity and bandwidth. So this isn't just a vanity spec, this is a legitimate, critical edge right where the industry is heading.
Then we have this absolutely mind-blowing figure, 6 gigawatts. Wow. Back in October 2025, OpenAI signed a multi-year partnership with AMD for 6 gigawatts of power specifically to deploy Instinct GPUs. The first gigawatt of that hits in the second half of 2026. If you map that out into dollars, 6 gigawatts is roughly $15 to $25 billion in equivalent GPU spend. Let that sink in for a second. This isn't just a nice little win. This is literally the largest non-NVIDIA AI customer commitment ever signed in the history of the space.
But the bull case goes way beyond just the GPUs themselves. AMD acquired ZT Systems for $4.9 billion. And here's the genius part. They smartly sold off the lower-margin manufacturing arm, but kept the elite engineering team. That exact team built Helios, which is AMD's AI rack platform. This perfectly closes their systems-level gap right when data centers are demanding these full-rack architectures. And meanwhile, their traditional server business, it's completely dominating. The EPYC Turin CPUs captured nearly half of all EPYC sales in Q4 alone, and they've got the 2-nanometer Venice EPYC landing in 2026 to keep relentless pressure on Intel. Make no mistake, this server CPU dominance is literally the cash engine that is funding this entire multi-billion-dollar GPU AI push.
All right, let's look at part 3, the bear case against AMD, the Goliath moat, and looming risks. Because to truly understand this complex topic, we have to objectively look at the structural walls AMD is hitting.
Now, what's really interesting about this slide is the stark contrast in profitability. Just look at this gap. AMD is guiding for a gross margin of roughly 54%, while NVIDIA operates up at roughly 70%. This 16-point gap is the single biggest reason Wall Street totally refuses to value AMD's stock as highly as NVIDIA's. It's a massive threat known as multiple compression risk. Think about it. Customers explicitly want AMD because they want a discount compared to NVIDIA, but that inherently means AMD has lower pricing power. Plus, standing up massive new hardware systems like Helios costs a ton of money. So until AMD can effectively expand those margins, the risk of their overall valuation being dragged down is very, very real.
Then there's the cold, hard market reality. Right now, AMD has about 12% of the AI accelerator market. Now, make no mistake, capturing 12% from essentially zero a few years ago is fantastic progress. But they're still facing a true Goliath. NVIDIA commands roughly 80% of this space. And guys, it is exceptionally hard to move mountains when your competitor has an 80% gravity well pulling the entire industry toward them.
And you know what that gravity well is actually made of? Software. NVIDIA's CUDA ecosystem has 17 solid years of refinement and over 4 million developers locked in. It's just the absolute default for AI training. Now, AMD's competing software, ROCm, has finally reached true production quality, which is great, honestly. But in the real world, ROCm is still often a delayed-by-one-version reality, whereas CUDA gets day-zero optimization on every single major AI framework. This massive, sticky developer lock-in is exactly why NVIDIA defends its 80% share so fiercely. It's incredibly tough to break.
The external threats are also mounting from just about every direction you look. For starters, hyperscalers like Amazon and Google are busy building their own custom silicon, which completely bypasses merchant sellers like AMD altogether. Amazon's CEO even hinted recently they might start selling their Trainium chips externally to enterprises. Wild, right? Furthermore, NVIDIA is definitely not standing still. Their Vera Rubin generation ships in late 2026, which threatens to close that memory advantage AMD currently enjoys. Add to that, both AMD and NVIDIA share immense supply concentration risk by relying so heavily on TSMC's advanced nodes. On the geopolitical front, China export restrictions have basically cut off a massive revenue avenue. And finally, institutional confidence might be wavering just a bit. Cathie Wood's ARK Invest dumped roughly $80 million of AMD stock right before this print. Depending on how you view her track record, that signals a pretty serious de-risking move by committed AI bulls.
Which brings us to this now famous quote from CEO Lisa Su from the Q4 call. She said, "We do not believe we will be supply limited on the GPU side or the CPU side." I mean, it's incredibly confident, but man, it's also incredibly risky. Because think about it. If the May 5th call reveals any supply constraints whatsoever, whether we're talking TSMC packaging, advanced node wafers, or that HBM4 memory, this exact quote instantly becomes the overarching bear narrative for the rest of the entire year. They've kind of painted themselves into a corner with that level of confidence.
That brings us to part 4, the earnings scorecard. What to watch on May 5th. Let's consolidate all these arguments into a concrete checklist. So the crucial point is, when the numbers drop, here is your exact scorecard to watch. First, the Q2 FY26 revenue guide absolutely needs to come in above Wall Street's expectations. Second, they must hold that gross margin line at 54% or better. Any slip there will be heavily punished. Third, we really need to see the MI350 customer mix expanding to hyperscalers beyond just Oracle. Fourth, they need to provide solid tangible cadence updates on that 6 GW OpenAI deal. And finally, the supply chain commentary must show zero visible constraints to back up Lisa Su's previous claims. Hitting these targets completely validates the bull narrative, but missing even one, that could easily trigger the 10% volatility that the options market has already priced into the stock.
Which leaves us with this final burning question to ponder. With a mind-boggling $700 billion pie sitting on the table, will the May 5th print validate AMD's narrative as the ultimate AI second source, or will these structural risks we've discussed break their valuation multiple? The stage is completely set, the stakes have literally never been higher, and all eyes are on the data. Thank you so much for joining me for this explainer, and keep learning.